Hello everyone, this is Daddy here. Hope you're well. Today we want to look at intraday breakout strategy. I know some of you want to take a trade within a day. Open the trade in a day and close it same day. This strategy is for you. Okay? In this strategy, first of all, we'll look into the introduction. We introduce it. We see why we need to trade this strategy, why using this strategy. We look at the entry and exit setup. We look at when should you trade this strategy and when should you not trade this strategy. And finally, we look at a practical example. We go into the live chart and show you practical example. At the end of this presentation, at the end of this lecture or lesson or whatever we call it, I want you to be able confidently to open a chart up, look at this strategy and demo it first, and then you can go live with it if you feel comfortable trading it. So without further ado, let's go forward. Okay, so we introduce it. What is it? This strategy is very simple. It's just finding the high and the low of the Asian session. Okay, it's a kind of a scalping method, but what we are looking for is a high and the low of the Asian session. We are not going to use trend lines, chart pattern, or anything like that. This system is very profitable. And now I'll show you how to determine the Asian high and low of the day. Now, look at the chart on the screen. What you notice first of all is a box. This is called the breakout or the Asian box. So it has what? It has the start of the session and the end of the session. So Asian session starts at 21 GMT, 9 p.m. GMT, and closes at 6 a.m. GMT. Okay. What do you notice as well is that we form two levels, the high and the low. So we have the high and the low. So the high was formed round about here and the low was formed at this candle here. So these are the information that will help us in this strategy. Okay. So why do we need to use this strategy? What is the advantage? What's the selling point? Okay. One thing is that there's always going to be rivalry between Asia and Europe in terms of banks. So we want to explore those opportunities. What about the price cycle? There is a price cycle in Asian session. What price level we reach in Asian session? Do we break it in Europe or in London session? Do we still trade within that price range? All those questions. The same thing, do we have any support or resistance level? And if we can find those variations, we can explore and exploit it. Okay. Now, how do we set the entry and the exit? Okay, I will give you specific rules that you can use to enter and exit the market, and then you can continue to use it often as much as you like. So first thing is, let's discuss what pairs we can trade. These are the three pairs we can trade. For today's lesson, we will use dollar Swiss francs as an example. Okay, we only use one indicator, which is the moving average. We're going to use 55 period smooth moving average. Okay, now buy order setup. So how do we set up our buy order? Okay, so you have a chart. As you can see, price is above moving average, condition 1. Secondly, you need to look for the high and the low of the session. The good news is that this indicator have drawn this session for us. So you don't have to worry too much about how to draw the box. It will be drawn for you. Okay, so I'll tell you about the indicator later on. So you find the high and the low of that range. Okay, right. So when you know the high of the range, you set a buy stop above the high. Because price is above moving average, we are only looking to buy. So we are not interested in setting a stop order at all. It's buy order only, right? So you set your initial stop loss at the low of that range. Okay, initial stop loss at the low of that range. your first take profit target, TP1, okay, will be the same size as the amount of pips you risk. So this is your stop loss. Let's assume that you risk 20 pips here. Then your take profit 1 also will be 20 pips, okay? Now, once you are in the market, so here you are in the market at this point, at this bar. So you move your stop loss from the initial point to the below the candle that take you in, the breakout candle. This is the breakout candle. This is the candle that break the high of the day, of the session, okay? So you place your stop loss just beneath that candle. Why? The reason is we want to reduce our risk even further. Let's assume that this was 20 pips stop loss. Now we are able to reduce it to 10 pips or something like that, half of the risk, okay? Now, if the price continue to go in your favor and you hit your first take profit target, what you do next is you move your stop loss again. Your stop loss is already here, so your stop loss is about 10 pips stop loss. Now you move it to break even, to the starting point where your trade was triggered. It means that for your TP2, you can never lose again on that trade, okay? So why do we do that again? Is to make sure that we protect our capital. We make sure we take minimal risk as possible. As soon as we can make our risk reduce, we reduce our risk instantly, okay? And the TP2, so the way you trade this is you have two positions. You enter either two lots at the same time, or if it's a one lot, then you can exit half of it and the remaining half at TP2. So you have exit first half at TP1. So where are you going to exit the second half of your trade? Okay, you can either do that at twice the stop loss. So you remember that the stop loss here, for example, we assume was 20 pips. So you exit the first one at 20, the second balance of your trade at 40 pips. Or you wait till the end of the day here to exit your trade. Or if you have a certain amount of pips in mind that you would like to collect, so if it's 40, 50, 60 pips, you can also use that as your TP2. Now let's look at the sell order. The sell order is exactly as buy order, but the opposite way. All right, so now we have the same chart. We have the moving average there. You've seen the session, the Asian session high and the low of the session, okay? And then we know that the price already below, so we are only looking to sell. We are not going to buy here because price is below moving average. Okay, so what do? We place our sell stop below that low of the range, okay? We place our sell stop there. Where is our initial stop loss? It will be here, right at the top. Yes, it is right at the top here where we protect ourselves. That is the initial stop loss, okay? Where is our target? Our TP1. Our target will be what? The same size as your stop loss. So it will be somewhere down here. Let's see. Right, so it's somewhere down here because this is our stop loss. Let's assume it's 20 pips and our TP1 is also 20 pips. Okay, now you are in the market, right? You've entered the market through this bar, and then immediately what you do is you reduce your risk further. Okay, so by moving your stop loss, so your stop loss that used to be here, you will move it down here just above this breakout candle. That is the breakout candle, the candle at which you are triggered into the market. So you put your stop loss just above it. Have you seen what happened now? Your stop loss used to be this much, but now your stop loss has reduced significantly to this. So if this were 20 pips before, we're looking at about 4 pips now, or 5 pips. So reducing your risk even further. Okay. Now, if you hit your TP1, right? So you're taking your TP1. So what you need to do again is to protect yourself even further. So move your stop to break even. Move your stop from here to break even. So it means your TP2, whatever that happened to the second part of your trade, you can never lose anymore because you have protected yourself against any losses. You've broken even. So as we said before, your TP2, you can either close it at the end of the day, or you can use twice your stop loss. So you see, this is your stop loss, which is 20 pips in this scenario. So your TP2 could have been 40 pips, but you see, you don't have up to 40 pips down to the end of the day. So your end of the day might be the way you will exit this one. Or as we said before, if you have a number of pips in mind that you would like to collect, so you can set that also as your TP2. So guys, this is the sell order setup, and we have talked about the buy order setup earlier. Now we want to discuss something also important. Yeah, when should you trade this strategy? The reason why I brought this up is sometimes a strategy works perfectly in some circumstances, in some scenarios, in some trading conditions, and that same strategy, when the condition changes, that strategy will fail, and traders usually will blame the strategy. No, it's not the strategy. It's because we do not understand that the conditions has changed. And when conditions changed, you either modify or adapt the strategy, or do not use that strategy and move to another strategy that is suited for that particular conditions. Okay, for this strategy, these are the conditions that you should watch out for. First of all, at that session, the Asian session, do you see visible support and resistance level? If you do, that's good news. Is it a relatively low volatility during that session? If it is, that's a good news. The trading range for that session, for that Asian session, is it very small? If it is, that's very good news. What about you yourself personally? Do you have confidence when you see the trade setup? Do you have a confidence that this trade is going to work? If you do, that is good news. And finally, are there scheduled news events that is associated with the currency you are trading for that day? If there are no news, oh, fantastic. So that's a good news for you. Okay. Now we are going to talk about when you should not trade this strategy. That is, when the conditions has changed, you either changed the strategy you are using or modify your strategy to the new condition. Okay. Now listen, here we have no visible support and resistance level during Asian session. Alarm bell. Okay. Very high volatility during the session. Hey, alarm bell. Trading range is very high or very large. Alarm bell ringing. There's no confidence. You yourself, you have no confidence in that trade setup. Alarm bell is ringing. You have extensive news that is going to be played out on that day. Let's say FMOC, or you have non-farm payroll news, or you have interest rate release and things like that. Then you don't have to trade that day. Okay. Now that we have gone through all the rules, the do's and the don'ts, now let's go and see the live chart ourselves. Okay, good. So this is a live chart, and this is USD Swiss francs, USD chef, and we're looking at the chart here. So I'm scrolling. Let me scroll to today. Yeah. So I'm scrolling to today. Today. This is today now. Okay. So this is the Asian session today. If you look at it, because we are below moving average, so we are only looking to sell. So I will I will insert a line here. Let me insert a line here. So this line is my sell stop order that I put in the system, okay? But you can see that my sell stop was not triggered. Why? Because price went up. That's fine, no trade. So I moved to the next day. That was yesterday. Okay, let's move to yesterday. What happened yesterday? The same thing happened here. We have the box. This is the Asian box here. Oh, guys, before I go forward, let me show you the indicators, right? So we have two indicators. One is the session indicator and moving average. Session indicator is the indicator that draw these boxes for us. So what are the properties? Okay, first of all, you have the Asian begin. And I told you that the Asian session starts at 21 GMT and it finishes at 6 GMT, 6 a.m. This broker I'm using is GMT plus 3 hours ahead of GMT. So that's why instead of 21:00, this one is midnight 0:00. Yeah. And in the morning, instead of 6 a.m., it is 9 a.m. So that's plus 3. So you need to check your broker's time. I'm sure you know how to do that. Check your broker's time, compare that with your with GMT. So that is what you will enter here. So we have entered the time here for Asian session. We don't need to enter anything for we don't need to display Europe or US session. That's why the color are none, so we don't want to see them on the chart. So then second indicator is the moving average. That's MA55. It's a smooth moving average. You have simple, exponential, smooth, but we are using smooth. There's not much difference in these moving averages, but for consistency's sake, let us stick to smooth moving average. Okay. So we were moving to yesterday. Okay. So this is yesterday. We see the price here. We see the box which is being formed. Okay. And then we draw our line again. So let's insert another line here. So we insert the line here. So we are looking to sell as well. So we start our line. We see that our trade has been taken here. All right. Trade has been triggered here. A sell trade. We put our stop loss just above. So let's put another line for our stop loss. So our stop loss is here and our trade is triggered here. So it's never even anywhere near stop loss. So as soon as we gone into the market, we can move our stop loss as we described before. We can move our stop loss downwards. Yeah. We can move our stop loss right above the bar that trigger us. Okay. Once we move our stop loss, let's see what is our initial stop loss. Initial stop loss was actually here. Okay. So it was here. How many pips is that? The pips is maybe about 16 pips, and our TP1 will be about 16 pips. So our TP1 is 16 pips. Let's see, do we have 16 pips from entry? 16 pips. Yeah, this is 17 pips. So our TP1 here, if you are using twice your stop loss for TP2, that will be about 32 pips. So where is it? 32 pips. So you're out with your two part of the trade successful. If you are using end of the day for your second exit, this is the end of the day, you are looking about 75 pips. Okay. So, or if you set yourself a target of a number of pips to come out, that's also very good. All right, that's a short example, a sell example. Let's look at a long example. Okay, so we can look at any of these as an example. Okay, let's pick this one. Let's pick this one. So this is a box here, and we want to go long, right? So we want to insert our line there for going long, so we know we are going long round about here, right? And our stop loss, we are going to make our stop loss round about somewhere around there, okay? But remember that, note that our trade was triggered here, so this stop loss is not touched at all because trade trigger here and it took off. So let's see what is our initial stop loss. Initial stop loss is about 16 pips, 16, 17 pips as well. So our TP1 will be 17 pips, which is round about here. TP1. Our TP2 could be 34 pips. Okay, this is 30 pip maximum we got here. So it means that we got TP1. So our TP2 could be end of the day. We could come out at the end of the day. But remember to always move your stop. So for example, on this trade, your initial stop was here. After you have triggered and you're in the market, you move your stop loss below this line here. You remember, because this is a breakout candle, the trigger candle, so you move your stop loss below it, and once you hit your TP1, then you move your stop loss again to your open. Yeah, so you move your stop loss so that you have a free trade. You can no longer lose on that trade. Okay guys, I hope you understand this strategy. It's very simple. You can try it on a demo first. Practice on demo until you feel very comfortable. Right, so if you have questions or anything you want to know more about this strategy, you can ask me. As usual, make a comment on the channel and ask any question you want. I'm going to make a template for this and the indicator. And if you like to receive one, you can, as usual, send me a comment. And first of all, you must subscribe. Yeah, you subscribe and gives us a thumbs up that you like the video. And then I'll send it to your email address. Okay, guys, I hope you enjoyed this lesson today. And I'll speak to you shortly. It's Dare.